Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP 500 for Wednesday, June the 17th. Well, quite an indecisive day today. If we look at the character of the candle, it's changed dramatically from the last 2 days. The size of the body has reduced quite dramatically. The body is still red, which means that there was still a net bearish gain by the sellers today, but very little. The body is in the middle of the candle as well. Now this is an indecisive candle. It's a spinning top candle and also very close to being a doji. So it means a lot of indecision. It means that the market opened at this point. The buyers pushed the market up to the high. Sellers came in, pushed the market down to the low, and the buyers came in to close near the open, which means that that battle between the bulls and the bears for the day wasn't won by anyone. Now, importantly though, the first time frame downtrend is still intact. We still have a series of lower highs and lower lows, so we don't have a change of downtrend yet, and that's what should override all of our decision-making process. The trend is still down. Now in the second time frame though, the trend is still up. So what we should be looking for is some signal to go long. Now, if we do go long here though, we need to remember that we have this area of resistance. So you need to judge what sort of reward you're going to get out of a long trade compared to the amount of risk. So importantly for this market, the high of today's trading is very important. Now, we're still trading above the cloud or the Kumo, which means that the market is bullish. So we don't necessarily want to be taking short trades unless we're trading very short term. When we're trading above the cloud, the strongest signals that we can take are the long signals. When we're trading below the cloud, the strongest signals that we can take are the short signals. Now, interestingly, this market is retraced back to within this zone of congestion, which is fairly normal for a market to do. And just looking at the character of those candles up here, this market didn't really want to go up. When it was trading up there, it looked like it didn't want to go down. We had all of these indecisive candles similar to the candle that we've got today. Now, our Ichimoku indicators, the Kijun-sen, the pink line, has turned flat, which means that the market is lacking direction. It hasn't got that upside momentum that we saw over the last few months. Luckily, it hasn't turned down yet. If it turns down, it means that there's some downside momentum, and that's not what we'd like to see in this sort of market. If we look at the Tenkan-sen, the faster line, it turned down a few days ago, which means that there is some short-term downside momentum. Now, as I said yesterday, if this market does trade up, which it very well could do, we need to take out the high. We could trade up to roughly around this zone of resistance, which will coincide with this swing high here, but also it will likely interact with the Tenkan-sen. And we know that when the markets are moving very fast, the Tenkan-sen will act as an area of resistance. So the likely scenario is that if we do have a new first time frame uptrend, the market will retrace back up to roughly around this area and then potentially sell off again. But what we need to do is react to how the market behaves when it's interacting with this indicator or with this zone of resistance. Now, if the market then does sell off, we identified this area here as an area of support, but now that we've moved on a few days, the top of the cloud will be an area of support before we interact with that swing low support, or the low of the congestion area. So it looks like the market has some definite targets to trade to, and potentially we could be trading within a fairly large zone for the next few days or few weeks.